Well, yes, as tensions in West Asia escalate, several sectors which were in focus last week continue to remain in focus today. But first up, let's start with a sector which tends to be positively impacted on account of surge in crude oil prices, and that is the oil exploration sector. The stocks, the likes of Vedanta, HOAC, Oil India tend to be positively impacted on account of higher profitability. In fact, for every $5 increase in crude oil prices, earnings of Oil India and ongc rise anywhere between 7 to 12%. But on the flip side, we have oil marketing companies, the likes of hpcl, bpcl, iocl, whose refining margins and marketing margins get negatively impacted on account of surge in crude oil prices. And data suggests that for every 0.5 per litre change in fuel prices, their EBITDA is impacted anywhere between 7 to 11%. We also have gas companies, the likes of GAIL and other Gujarat Gas and other gas companies which are negatively impacted because Qatar has gone ahead and stopped production. Supplies into India have been affected, and that is the reason they are not able to cater to the demands of their customers. Ceramic and tiles industries has already raised concerns about non-availability of gas which is required for production of tiles. And that is the reason they are not able to ramp up their production. In fact, many ceramic companies have already said that they've curtailed production on account of non-availability of raw material. Defense sector is another sector which is positively impacted. Of course, it is sentiment positive because of geopolitical tensions. Demand for defense products is rising in the global market. Shipping companies, meanwhile, are also positively impacted because any kind of increase in freight rates in the global market directly adds to their top line. And hence, we are seeing a positive for all of these shipping companies, the likes of GE Shipping and Shipping Corporation of India. Export-oriented companies, something like L&T, remember the stock declined in trade last week on account of its significant exposure to the Middle Eastern region. L&T has about 40% of its order book that comes from Middle East, and that is the reason we have seen something like L&T, Kalpataru Projects, Man Industries decline because of the significant exposure they have to the Middle Eastern region. Meanwhile, let's also talk about the consumers of crude and crude oil derivatives, something like paint companies. In fact, 40% of the raw material cost for paint companies comes from oil and its derivatives. For tire companies, 40% of the raw material, which includes synthetic rubber, carbon black and chemical prices, are derived from crude oil derivatives. So is the case for aviation, and we were just talking about Interglobe Aviation and the fact that it has fallen 8% in trade today. Remember, last week and in the month of March so far, Interglobe Aviation is down nearly 16%, and this is because of surge in crude oil prices and consequent increase in aviation turbine fuel prices that we have seen in the global market. Lubricant manufacturers are also affected because 50% of their raw material comes from crude oil derivatives. Cement, so is the case with cement as well. Gold-related stocks tend to positively benefit on account of surge in gold prices in the global market. So we have Kalyan Jewellers and Titan, which tend to positively benefit on account of this. Lastly, rice companies. Remember, Middle East is a big market for India's rice exporters. In fact, nearly 80% of India's basmati rice are exported to the Gulf region, which is currently impacted on account of closure of Strait of Hormuz, and that is the reason stocks like KRBL and LT Foods are declining. They were declining last week, and the trajectory is expected to continue this week as well.